Guys, Dennis Wilbur, the Active Trend here. I want to make one statement right off the bat. One, no one can predict where the bear market bottom is going to be or when it's going to happen. Fact of life. When do we know when a bear market bottom happens? After the fact. But I'm going to show you a couple of tools today in today's video that may help you determine where we could potentially get a turnaround. Let's jump into today's session right now. Got a lot to cover. S&P. Now, normally I look at the spiders, but the S&P, I want to look at that today basically because sometimes the leverage or the ETFs do not give an absolute accurate picture of where things could be. I've highlighted a couple of lines here, that big red line right there that you see. That is where we hit the 20% downside from the highs of the year or the past highs. That would make the S&P in a bear market. What kind of candlestick do we get today? We have a spinning top, an indecision candlestick at support. However, what's the momentum indicators telling us? The momentum indicators are telling us that, hey, I may want to go down a little bit. This is the daily chart on the TSI and also on the TSI on the weekly chart. Still pointing down, although I am getting closer to a three-line cluster with the market forecast. But at this time, everything is pointing to the downside. Well, what is our trajectory down? And there's a couple of things we can do here to establish how far we may fall going into this session. And one of the things I want to grab hold of initially is I'm going to take the Fibonacci Extension tool. As you can see, that's a Fibonacci Extension tool. And I want to basically go in here and do this. Let's get this up here where we can see a little better. And I want to know is, give me a projection on where this could fall to. Have we already reached that trajectory? And as you can see, in fact, symmetry with that initial fall from the beginning of the year to the fall in last part of February has already been reached. Where's the next target? Well, the next target is at the 1272 extension. And I look to my left. Do I see any past support over there? I sure do. There is some past support over there. So this is one way to establish where we may fall to. So I find it very interesting that this longer-term red line here was based off of the rally out of the COVID bear market up to the past high. Isn't it interesting? It almost coincides exactly to a move down. And from this level to this level, that would be I want to say, if this is the 1272, this is a 1618 right in there. I have to get rid of that one to show you that. But again, coincide, that is a strong level of past support. So that's what we can learn about the S&P. There's our projected downside. However, what about on a shorter time frame? Let's run over here to the to the weekly chart, daily charts, and we'll do the same type of thing. Let's see how far the projected downside is. And I want to take this last dive here and rally back up. And this is the way you use the Fibonacci extensions. We are in a downtrend. There's nothing to expect the downtrend is going to stop. And this gives me a new line in the sand. This is the 100% symmetric move down about the 3640 level. Isn't that interesting? The 1272, excuse me. The 1272 extension off of that move also brings me really close to that 50% retracement. So S&P, this is where I'm looking at diving to and approximately when I might and how long it may take me to get there. Let's see. Go ahead and get that. And one of the things I'm asking myself questions about is how well are the indexes actually obeying or respecting the Fibonacci's? And you see here, I already have it in place for the NASDAQ from the high from the year down to that first low in March, back up to this level, and then symmetric move down. We already hit it. Look how close and clean that came to hitting that zero line. In fact, the low there was 11,692, and my low there was 11,678. That's pretty darn close on something that is that valuable. Now I can basically bounce out of this same way. Let's remove that. Let's go back here and jump into the last fall down. That's from here to here. And we just do the same thing. Grab it at the high, take it down to the low, back up to the swing high. Where are we likely to go? Well, here is a 50% move down. Here is the 100% move down right here. Look to your left. What do you see? Support coming in. It just cracks me up how much, or I find it intriguing how well these Fibonacci's do predict. Now, am I saying that we are going to go specifically to that level? Take your Fibonacci levels as kind of a zone. So if it approaches that area, I want to be alerted. But again, that may be where, right there, might be a level of support where we get a bounce, which could lead to a new rally and a new uptrend market. Or we could, if we break through that, look at the next levels down. So that's what we're looking at, the NASDAQ. Excuse me. And what about the Qs? How are the Russell, RUT? How well does it follow the Fibs? And again, we can do a similar type thing. Let's go ahead and take a longer term look here. Grab there, back down to this level, back up to this level. And you see, we've almost hit the 78% retracement as of that day. Here is the 100% move down. Look to your left. Yeah, there's levels of support in there. So that's one way we can take a look at it. Move that out of the way. Go back over to the daily chart because I have definable patterns here where I've got this basically first leg down, leg up, leg down, leg up. And so where's it likely or where could it potentially go? And oftentimes what this does, it gives me a trajectory down to the downside. There was a 50% retracement there, and the 100% retracement is all the way down here at the 1590 level. So again, those are levels where I'll lay in my alerts slightly above them so that if they trigger, then I go to my charts and say, do I have a candlestick reversal signal, and is my momentum coming back up out of the bottoms? One of the things we will take a look at with the momentum indicators in the near future is to do another study on those to show you exactly how to use TSI. And if that is something of interest in, leave a comment in the comment section saying, yes, I want training about how to use the TSI. Appreciate that. Just say TSI in the comment section. And last but not least, hey, I promise you 2 stocks. I'm looking at how are we going to get short on Walmart? Look at this. This is just ugly. I mean, I would say it's dog butt ugly, but I think it surpasses that. What are we looking for? When you get something, a big sell-off like this, this is severe. I mean, this is damaging to this company. We're looking for a pullback up towards the midsection of this big down candle. And look at, there's a level of past resistance right there at about the 131 level. Now, it may not pull back up to that area. See this little gap down right here? That is a level of resistance. And so we may only get up to, I'll put an alert about 128 to the downside. The other one, the company that I definitely don't go to the bathroom in, and that's Target. Similar type situation. Here's a low here, midsection of the gap down. This whole range here is now a level of resistance. So I'll look for some kind of pattern of basically coming back up and then falling. This Target looking very ugly to the downside. Again, this is a lot of damage being done to these companies. Today, I just want to remind you of one thing, journals. I put a link in the description on how to get a journal, because traders who journal are more consistent. My son Brandon developed these journals. They are absolutely awesome. One of the best sellers over on Amazon. Go check them out. I encourage you to check them out. So that's what we have for today, guys. And I will basically say aloha, God bless.